Hey everyone, welcome back to the channel. Today, we're diving deep into a key player in the sky-high world of aviation, specifically, the part that keeps those planes flying safely and efficiently. We're talking about SIA Engineering Company, listed on the Singapore Exchange. SIA Engineering is a prominent player in the global aviation maintenance, repair, and overhaul (MRO) industry, with a particularly strong presence right here in the Asia-Pacific region. They're the folks who handle everything from routine checks to major overhauls on commercial aircraft. Think of them as the highly skilled mechanics and engineers that keep the airline industry moving. In this video, we're going to break down SIAEC's current state, their recent financial performance, their future potential, and ultimately, whether this stock is something you should be considering for your investment portfolio. Please note that the content presented in this video is for informational purposes only and does not constitute investment advice. We strongly recommend that you seek proper guidance from a qualified financial advisor before making any investment decisions. First off, let's talk about the market they operate in. The aviation MRO market is experiencing a strong recovery post-pandemic. Globally, it hit over $114 billion in 2024, even surpassing its pre-COVID peak. And the Asia-Pacific region, it's projected to be the largest MRO market in the world. We're talking about potentially more than doubling in value over the next 20 years, reaching $129 billion by 2043. This massive growth is fueled by factors like rapidly increasing air travel, a growing middle class, and an aging fleet that needs more work. Even newer aircraft are driving demand due to unforeseen durability issues. So, how does SIAEC stack up in this booming market? They are recognized as a major provider in Asia-Pacific and among the top globally. They have some serious competitive advantages. A strong brand reputation built over decades. A comprehensive suite of services, covering everything from airframe and line maintenance to engine and component work. Approvals from 29 national aviation regulatory authorities, giving them wide reach. Crucially, strategic joint ventures and partnerships with major players like GE Aviation and Pratt & Whitney, enhancing their capabilities and access to technology. An extensive network across Asia-Pacific in countries like Singapore, the Philippines, Indonesia, Japan, and Malaysia. Now, let's look at their recent performance. The stock has shown positive momentum recently. As of May 16, 2025, it was trading around SGD 2.42, showing decent gains over the past 5 days, 30 days, and even the last year and 5 years. It's currently trading near its 52-week high. The key drivers for this positive movement. The big one is the continued recovery in the aviation industry, leading directly to higher demand for MRO services. But just as important are SIA Engineering's strong financial results. Let's get into the numbers. Their current financial status. For the full year FY 2024-25, which ended March 31, 2025, SIAEC reported total revenue increased by a strong 13.8% year-on-year to SGD 1,245.1 million. This was driven by stable demand and higher flight handling volumes. Their net profit saw a significant increase of 43.8% year-on-year, reaching SGD 139.6 million. Looking at the segments, airframe and line maintenance saw revenue increase by 9.1%. While this segment still reported an operating loss of SGD 12.6 million in FY 24-25, this was a significant improvement compared to the previous year's loss. It's moving towards profitability. The engine and component segment was a strong performer, with revenue jumping by a massive 29%. This segment is the primary profit driver, recording an operating profit of SGD 27.2 million. The strong demand here is likely due to increased flight activity and delays in new aircraft deliveries, keeping existing engines in use. Financially, SIAEC looks very healthy. They have manageable debt levels, with a low debt-to-equity ratio of just 5% recently. They also boast strong liquidity, with current and quick ratios well above 1. Their cash balance as of March 31, 2025, was a robust SGD 663.4 million. This strong financial position gives them stability and flexibility. And for income investors, SIA offers an attractive dividend yield, currently reported at 3.7%. For FY 2024-25, the total dividend is recommended at 9.0 cents per share, up from 8.0 cents last year. The payout ratio is estimated at a reasonable 73% for FY 2025, suggesting sustainability based on current earnings. So, what about the future? The short to medium-term outlook is positive. The continued recovery in air travel is a strong tailwind for demand. SIA is actively working to capture this growth, expanding its geographical presence in high-growth markets like India, where they're partnering with Air India for base maintenance facilities, establishing a joint venture in Cambodia for line maintenance at the new Phnom Penh airport, investing in capabilities for new generation aircraft, expanding facilities for engine MRO joint ventures like Saresal and ESA, enhancing component capabilities through new joint ventures like Eaton Aerospace Component Services Asia in Malaysia. They're also embracing technology to boost efficiency. Initiatives include the elite digital platform for line maintenance and moving towards paperless operations at their new Malaysia facility. They are even exploring areas like additive manufacturing, 3D printing, for aircraft parts. But it's not all smooth flying. The industry faces challenges like ongoing supply chain disruptions, leading to potential delays. Rising costs, particularly for manpower and materials, can pressure profitability, and finding skilled labor remains a challenge. Currency exchange rate fluctuations can also impact their financials. They are addressing these through initiatives like their new Enterprise Operating System, EOS, and focusing on efficiency. So, the big question: should you consider this for future investment? Based on the analysis in the report, SIA Engineering presents a buy recommendation for investors with a short to medium-term horizon. Analyst ratings generally support this, with a consensus of moderate buy and price target suggesting potential upside from current levels. The rationale is clear: operating in a growing market, a strong competitive position, robust recent financial performance, healthy financials, an attractive dividend, and strategic moves positioning them for future growth. While you need to be aware of the risks, supply chain, costs, labor, and the cyclical nature of aviation, their strengths and initiatives seem to outweigh these challenges in the short to medium term. In conclusion, SIA Engineering appears to be a well-managed company benefiting from a recovering and growing market. Their recent financial results are strong, and their strategic plans seem solid. But remember, this is based on the provided report and analysis. Always do your own thorough research and consider your investment goals before making any decisions. What do you think about SIA Engineering? Let me know in the comments below. Don't forget to like this video and subscribe for more in-depth stock analysis. Thank you for watching.